Treasurer Jim Chalmers says Australia will avoid recession, but that inflation will rise through this year and economic growth will slow in the next 2 years. Mr Chalmers says that inflation will peak at 7.75% this year before easing to 5.5% next year. And joining us live now is Chief Economist at AMP, Shane Oliver. Shane, thanks so much for your time. Firstly, what did you make of Jim Chalmers' speech and predictions for Australia's economy?
I must admit there was no real surprises there. The Reserve Bank had already revised down its growth numbers. The inflation situation, we all know, is quite terrible. You can debate whether it's 7% or 7.75%. But the forecasts on the inflation front weren't particularly surprising. I must admit it wasn't quite as confronting as I thought it might have been. And it was broadly in line with what I think investment markets have already been factoring in, and certainly no great surprises in terms of our own forecasts.
Right. How reliable is this forecast? Could we be in a position that it's going to be worse and inflation could in fact soar past 7.75% this year?
Look, it certainly could. We've seen right around the world, major countries very similar to Australia, like the US, UK, Europe, see their inflation numbers continue to surprise on the upside and go well beyond 8%. The US is now above 9%. Europe is facing something similar, and the UK as well. So those risks are certainly there. And when you get into a period of high inflation, like we saw in the 1970s, it can tend to surprise on the upside for a while. I guess the flip side, though, is that economic growth is slowing down. We saw overnight the US economy met the technical definition of recession. You can debate whether it really was a recession or not, but whatever it is, the US economy has slowed down a lot. Global demand is slowing. Supply conditions are starting to improve somewhat, and that should help Australia through next year and see the inflation rate come back down again. And likewise, hopefully we won't see a continuous run of floods adversely impacting fruit and vegetable supply. So therefore you should also start to see some improvement on that front as well. But obviously the challenges right now remain immense. And of course, it is very important for the Reserve Bank to sound tough, to make sure that inflation doesn't get out of control, or inflationary expectations don't get out of control, because if that happens, then you will see a rerun of what happened in the 1970s.
Okay, so you mentioned a lot of talk about the US technically being in a recession. Certainly looks like it's heading for one. What about Australia? So I suppose that's the big question. Will we be able to avoid one like the Treasurer says we will?
Look, I think we will. That's my base case. I think the Reserve Bank Governor and the Fed keep talking about this narrow path. That path is quite narrow. So as you keep jacking up interest rates and whacking households with cost of living pressures, then obviously the risk of recession goes up. But providing we do start to see some relief on the inflation front, or at least a peaking in inflation maybe later this year, and the Reserve Bank doesn't get too carried away in raising interest rates, then I'm hopeful we should be able to avoid a recession. But it is a close call. Certainly in yesterday's numbers, there's no recession in there. The government sees growth slowing down, but still at a passable 2% or so, which is obviously a long way away from recession.
Okay, what about the stock market over the next 12 months? Is it going to be volatile?
Unfortunately, I think it probably will be. It's seeing a nice little rally at present. We have seen similar rallies along the way so far through this year. The market sort of gets its hopes up that maybe we've seen the worst from central banks. Maybe a hard landing will be averted. And of course, we saw more of that overnight in the US. But I think it's way too early to say that share markets are bottomed. There is, I think, still those recession risks remain very high, obviously, in Australia. Impact on earnings going forward, could see more downgrades. So therefore, in the very short term, at least out to September or October, which is known as a period which is often quite rough for share markets, we could see more downside. On a 12-month view, I'd hazard to guess that the market will probably be higher as ultimately interest rates reach a peak and start to roll over again, or show signs of rolling over again, and hopefully we'll avoid a recession. But there's still a fair way to go to get to that point. But the bottom line is this volatility is probably going to continue for a while yet.
Okay, Shane Oliver, thanks so much for your time.
Thanks, Gabriella.